Hello everyone, this is Alexander Nikolov. We are in the middle of October and let's take a look at the US stock market. Very interesting development happened in October so far. As I expected, there was a big decline earlier, but this decline was much shorter than I expected, and the S&P 500 found a low at 1075 level. And subsequently, we have witnessed a strong, powerful rally, more than, let's say, more than 150 points. So, what we have now, we still have a downtrend on the daily chart as the prices are near or below the declining 100-day and 200-day moving averages. But the strength of the rise from the early October low tells me that the index is not ready to resume its longer-term decline. So most likely we'll see some kind of a pullback soon due to the overbought conditions on both daily and hourly chart, but then we will most likely continue to observe higher prices toward the end of this year. Most of the people expect the prices to stay near the 1250 level, 1250, 1260 resistance level, but actually this is this level, the level of the breakout, of the breakdown, but because this level is focused by so many people, I will not be surprised if this level is overcome on the upside and the prices actually top out between, let's say, 1280 and 1310. So this is the most likely area for a top, and then I would expect the decline to resume. This is my major idea here, that the market, the uptrend from the early 2009 low has ended. Ended actually in July with a contracting triangle, and now we are in a complex decline that will last a couple of years and will eventually bring prices toward the 950 level. Let's take a look at Nasdaq. Here the picture is a bit different, and this may signal an even stronger market for the S&P 500 as well. Why the picture is different here? Because the advance from the October low is so powerful that it is approaching now the yearly highs here. We are just 50 points below the June and July's and April stops, and that means that most likely those highs will be exceeded. And wave-wise, that means that the entire price action from the early, from the February top, has likely developed as a sideways consolidation. With despite the strong decline here in August, we have basically a sideways pattern here. This pattern is an expanding triangle, X wave, and followed by a flat. And if that's correct, we are now heading higher toward a new high above 2460 level, and probably much higher than 2500 level. And going to the weekly chart of Nasdaq, this is my weekly count from earlier this month, in which I expected a move lower, and I believe the wavy down was already on the way. But now the latest development tells me this decline here for the past couple of months or so was simply an X wave, similar to the X wave that we observed in 2010 between March and August. And notice the similarities here. The current decline found support right at the 100-week moving average, exactly as this happened in the summer of 2010. So most likely we are now in another move higher. So the complex correction from the March 2009 low isn't complete. Wave Z now is underway. So we have W, X, Y, the current decline, the current low, October low, marks the end of the second X wave, and we are now in wave Z up. That will probably move the prices above 2500 level. And only then, later this year or early next year, the market will be in a position to turn lower in a more sustainable manner. Let's take a look at some other charts. The volatility index, let's focus on the short-term outlook. The volatility has, the VIX index has broken below the 30 level. Notice the importance of this level here during the August and September. Now this level has been broken, so the volatility is in a declining mode, and that means the volatility signals actually higher stock prices. So this supports my view for a larger move higher than initially I expected. The other ratio that you know that we regularly follow is the stocks divided to bonds ratio, SPY divided to TLT ratio. SPY is actually the ETF that follows the S&P 500 index, and TLT is the ETF that follows the 20-year Treasury bond fund. And we said numerous times that when this ratio is declining, that's generally negative for the stock market, and when it is rising, it signals a positive trend going forward for the stock market. And right now, despite the current rise from the early October's low, this ratio is in a big downtrend, well below the 20-week and 50-week moving averages. So we are in a downtrend here, and most likely the current bounce on the stock markets will simply move this ratio higher a little bit, but overall the general trend will remain lower. So going forward, this still signals this still brings negative signals for the stock market. And finally, let's take a look at the number of stocks within the S&P 500 index that are above their respective 200-day moving average. Only 32% right now of the stocks within the S&P 500 are above their 200-day moving average. Not a good sign overall, but notice this ratio has improved. This indicator has improved. Now it has moved above the 20 and 50 week moving average. So probably we will see some improvement toward 50, 60 level over the next couple of months. And finally, before I conclude, one other sector, because when I look at the individual sectors, most of them display mixed messages because of the huge damage that was done in August, with a huge decline in August and then in early October. But one group that particularly signals strength is the semiconductors. Notice the decline in late September, early October here found a low above the previous lows. So a good support was established here, and this group was really leading on the upside. So particularly I take a look at this group because semiconductors are usually a leading sector for the market, and with the current strength here, this is a good sign that the broader market may be supported for the next couple of months as well. So in conclusion, things can change very, very quickly because the market still remains quite volatile, and notice how quickly the broader outlook, the larger degree outlook, also changes from bullish to neutral and even to bearish within a couple of weeks. Right now, the chances are that we will see higher prices till the end of the year. In S&P 500, most likely toward the 1300 level, and in Nasdaq 100, most likely to new yearly highs well above 2500 levels. Of course, we will have to be very careful and observe the market on a daily basis, because the things, again, I can say that the thing can change quickly, so one needs to be flexible. And I will definitely do that in my daily and weekly updates. That will do it for today. Enjoy your trading, have a good trading, and see you soon. Bye.